Hello everyone. Today we are going to talk about a major capital market event that many people have overlooked. The Korean stock market has delivered a harvest for Wall Street. In the July that just passed, South Korea's Kospi index plunged nearly 40% from its June 22nd high. The monthly decline was the largest on record since 1987, exceeding the decline seen during the 1997 Asian financial crisis and the 2008 global financial crisis. SK Hynix fell more than 53% from its record high, while Samsung Electronics also declined by more than 40%. On July 28th alone, foreign investors net sold nearly 5 trillion won. Since the start of this year, foreign investors have recorded cumulative net outflows of more than $110 billion from the Korean stock market. Now let us look at what is happening across the ocean in the US stock market. The US stock market in 2026 is no longer the bull market in which the Magnificent Seven all rose together. As of July 27th, the Nasdaq index had returned only 7.8% year-to-date, lagging behind the S&P 500's 9% and the Dow's 9.1%. Among the former Magnificent Seven tech stocks, only Apple and Nvidia were still outperforming the broader market. Alphabet, Google's parent company, delivered record revenue, but its capital expenditures surged to $45.9 billion, and free cash flow turned negative for the first time in a single quarter in a decade. Nvidia's $750 billion AI deal instead reignited market concerns over the circular cash flow logic behind AI capital spending. At the same time, the Philadelphia Semiconductor Index fell below a key support level, and global chip stocks lost more than $1.5 trillion in market value over 3 days. The core targets of this harvest were only two stocks, Samsung Electronics and SK Hynix. Together, these two companies account for more than half of the market value of South Korea's Kospi index. Manipulating them is equivalent to manipulating the entire Korean stock market. The harvesting process can be divided into 5 steps. Step 1. Building momentum. From 2024 to 2025, Wall Street investment banks released a series of intensive reports, raising their forecasts for SK Hynix's HBM revenue by more than 300% within 8 months, and declaring that AI chip demand will keep HBM in short supply until 2027. Korean retail investors went into a frenzy. In 2025, the Kospi rose 76%, and SK Hynix's share price climbed more than 270%. Step 2. Taking the other side. By June 2026, Korean retail investors had net purchased as much as 79 trillion won of Kospi stocks, while margin account balances surged 71% to 29 trillion won. During the same period, however, foreign investors net sold 124 trillion won, quietly completing a high-level exchange of positions. Step 3. Loading the weapon. In May 2026, South Korea launched its first single-stock 2x leveraged ETF linked to SK Hynix. Soon after, Hong Kong and US markets also saw the introduction of 2x long products, inverse products, and related derivatives linked to SK Hynix. Korean cash equities, American depositary receipts, index futures, options, and leveraged ETFs formed a cross-market trading system. Wall Street could sell cash shares, and it could also short through short positions, options, and spread trades. Step 4. The reversal. After retail investors entered at high levels, the wind suddenly changed. In the second quarter of 2024, the borrowed short-selling ratio of foreign institutions in Samsung Electronics surged to 18% of total trading volume, a historical extreme, with more than 70% coming from US-registered hedge funds. On July 13th, just as SK Hynix had listed on Nasdaq, its local Korean shares plunged more than 15%. On July 28th, Samsung Electronics plunged more than 13%, and SK Hynix fell more than 14%. Leveraged ETFs linked to SK Hynix at one point fell more than 80% in July. Step 5. Wealth transfer. In the first half of 2026, foreign investors recorded net outflows of about $70.8 billion from the Korean stock market. The size of leveraged ETFs shrank from $50 billion to $17 billion. More than 1.2 million retail accounts received margin calls, and over 300,000 accounts were forcibly wiped out. A month ago, a story was still circulating on social media. A Korean girl messaged me and said this was the best summer of her adult life. This year she found a job, put all of her salary into the stock market, and made 5 years worth of wages. Now that best summer has ended, just in time to correspond with the Chinese solar term beginning of autumn. At the same time as Wall Street was harvesting Korea, America's attitude toward Chinese chips showed a subtle shift. On one hand, the United States was still tightening export controls. In January 2026, the US imposed a 25% tariff on imports of certain advanced AI chips. In June, it issued new rules prohibiting the export of advanced chips to companies headquartered in China. But on the other hand, loosening was also taking place. In December 2025, Trump approved Nvidia's export of H200 chips to China. In January 2026, the U.S. Department of Commerce institutionalized this decision, allowing H200, AMD 325X, and other processors to be exported to China through case-by-case approvals. Even more intriguing is what Apple is doing. Apple CEO Tim Cook is actively lobbying the White House, hoping to allow Apple to use memory chips from China's Changshin Memory Technologies and Yangtze Memory Technologies in products sold outside the United States. Apple believes this would help ease tight global memory chip supply and lower purchasing costs for U.S. consumers. Meanwhile, Micron Technology, the only major U.S. memory chip manufacturer, is desperately trying to block this plan. Micron CEO warned this could destroy the domestic U.S. memory chip industry, just as China's impact hit the U.S. steel industry. At the same time, on July 27th, Chinese memory chip giant Changshin Memory Technologies, CXMT, listed on Shanghai's Star Market. Its shares soared 466% on the first day, and its market value surpassed $487 billion, making it the largest A-share listed company in China by market capitalization. Its global DRAM market share has risen to about 8%, behind only Samsung, SK Hynix, and Micron. The United States says it wants to block Chinese chips, but Apple is lobbying to buy Chinese chips, Nvidia is selling chips to China, and the US government itself is approving chip exports to China. Behind this ambivalence, there is only one logic: interest. The interests of US companies and US consumers are what matter most. Put these two stories together and the picture becomes very clear. Korea. Wall Street used research reports to build momentum, leveraged ETFs to drive prices higher, and cross-market tools to short the market. Retail investors took the other side at high levels, while foreign investors exited at high levels. China. On its first day of trading, CXMT's market value approached $500 billion, directly challenging the world's three major memory chip giants. Apple is begging to use Chinese chips, and Nvidia is begging to sell chips to China. While tightening controls, the United States keeps opening one back door after another. Wall Street analysts frequently publish reports using price targets to attract retail investors and ratings to limit their own risk. Price targets are the sugar coating, ratings are the shells, and the real trading direction is where profits come from. Korean retail investors saw optimistic words, while Wall Street institutions executed the opposite trade. The rules of the game have never changed. Korea's best summer has ended. China's semiconductor story has only just begun.